As projected at the beginning of the year, the bull started here after the third week of 2023, shortly after crossing above this downtrend line. This bull may be ending soon and may enter into a range for the rest of the year. And this was what we have discussed back then at the beginning of 2023. I posted an idea and as well as a video as well. So then the title, it was short-term up with range later into 2023. Now let's take a look at this outcome. That was at the beginning of this year, and my projection is a short-term bull. And the outcome is it reached right on target at this primary downtrend line. And in today's discussion, first I will give you a recap, both technically and fundamentally, how we have derived this conclusion of this bull shortly after 2023, and also why the bull may be ending here and enter into a range for the rest of the year. Again, I will provide both my technical and fundamental observation. But before we get into this topic, please do take some time to read into the disclaimer below. Now let's get started. At the beginning of this year, on the third week of 2023, why I have derived a view that we're going to experience maybe the first into a second quarter on a bull run. Now, first, let me just touch on the technical reason. And if you refer back to my previous video, I explained how to draw a downtrend line and how to observe that the downtrend line have broken and transit from a bear market to a bull market. So this is how you draw a downtrend line. Connect three significant peaks and you try to find the best fit. And this was what I saw back then. 1, 2, 3 significant peaks, and I draw them together. And at the point in time, I saw that it broke above this downtrend line here. This was the third week of 2023. Yep. So it broke above very convincingly this downtrend line. This is the one. And my expectation technically is that the rest of the year, at least for the first or the second quarter of 2023, it should be bullish market. That was technical reason. Now, fundamental reason, it was this. Now, let me just help you to recall back then. And if you still remember, last year in 2022, the CPI hit a record high at 9.1, but I also saw that the inflation number continued to decline or descend to December number at 6.5. And that was a good news. And if this continue, likely the bull should pick up. And that was my expectation back then, technically. And fundamentally, I saw that there is an improvement on the CPI or the inflation number. Now, how about right now? So at the point in time, my projection is I have this primary downtrend line. Now, let me just brief you how to draw the primary downtrend line. So basically the rule remained the same, and I'm going to connect this two significant high, and I'm waiting for the third high to form, and I saw this. Now, no harm to just project them downwards. And after that, you try to find the best fit. And as we move down, I felt that the best fit, it could be around here. And we just got to make some adjustment. First, significant peak, second, and third. And this could be a little bit false break around here. Now, technically, it could be a bull has reached its target in a way. Now, let me just look at the fundamental reason, because then my observation is that come to a point that the marketplace will start to question that the inflation is not coming down to its target level at 2%. And market may enter into a range. So that was the fundamental reason. And now today, technical reason, it may have reached. Now, then fundamental reason, there are two key reasons today. And first is inflation. Now, we have to understand that the inflation, and this is what I quoted from Jerome Powell since the beginning of this year in different conference and testimony. Now, he said very clearly here is that Although inflation has been coming down from 9.1% to the recent number at 4%, but he stated this very clearly and very consistently throughout all the meetings is this. He said, inflation remains well above our longer run 2% goal. Now, though the latest number was at 4, but to reach 2% is still double the size. So it's going to take a while. It's nowhere close to 2% at this point in time. And you have to understand that over the last 40 years, I think the Central Bank of the United States did an amazing job that they managed to maintain at an average of 2% over the last 40 years. So today at 4%, it is still double the size of the 2% longer term goal. Now, the other fundamental reason that worth considering is the banking crisis in March and April. Now, he said this. He paused for a while. He said that he paused for a little while, that we don't know the full extent of the consequences of the banking turmoil that we're seeing. So the Fed, the central bank, are still observing what will be the implication of the banking crisis in March and April. And the reason it was because of banks having too much money. So that's a reason, but we will not get into the discussion at this point in time. But what I'm trying to say here is that these are the two key fundamental reasons that it may cause the market to come to a point that no, inflation is not taming anytime soon. So there'll be a point of consolidation. Now, so we have to also understand that when the market consolidate or range, what does it mean? Now, it means that the market do not have a clear direction of where the market is heading. It means that the market do not have a clear understanding where is the main trend is heading. So this is what my expectation for the rest of the year 2023, that is going to enter into a range or perhaps in a wider range. Now, in this case, I think if you're a trader, you should welcome that, because for traders, we enjoy volatility. Always enjoy studying the correlation between the markets and to uncover potential opportunities. And I hope today's sharing, it will be helpful in how we invest and trade. Feel free to leave me any comments below. I love to exchange ideas with you. Really happy that you stayed through this tutorial. You have many great trading weeks ahead.